Alrighty, good morning. Good morning, everybody. Friday, we ended up the day, and again, we're just going to kind of do a continuation of what we did last week. I'm starting off on a 21-3 chart. If you guys remember going back to, after news on Friday, we really made a really good bottom, obviously, in the S&P market. And, they just went up and up and up and up for the rest of the day, which you get that a lot, one-way trend. It happens every once in a while. And, again, when we get into Monday morning, after a strong trend to the upside, you can kind of see that we've got some continuation. Again, at midnight over here, we had Fibonacci support. They opened up, and then, we're still really pushing a little bit higher. So it's going to take a little bit more to change the trend after such a sustained run to the upside. I want to go through a couple of small mechanic things here with you guys real quick. First, on the website, on the resources page on the website. Bear with me here. Just want to make sure everything is running fine. Okay. Just double checking our YouTube live. I've updated the installers on the website, and what you're going to see in these installers, again, I'm going to post a couple of pictures. For those of you guys who are on NinjaTrader 8 or on NinjaTrader 7, I've put together, again, new workspaces. It's the same workspace that you had prior, so there's really not a difference. Somebody said in NinjaTrader 8, because the workspace had a 2021 designation, and that's because that's when I made that workspace. And we still use the same workspace for the last couple of years, and nothing's changed. But he said, hey, it'd be nice if they had a new date on them. So I went in and made a new date on each of the workspaces. So if you do download from our resources page an installer, you're going to get new workspaces added into your chart. I've also updated NinjaTrader 7 workspaces. And it's the same workspace you guys have. The only difference is it says 2023. Actually, there's one small little tweak that I made. And what I wanted to do is kind of go through that tweak, if you will. I'm going to post a picture of it in the chat room. As I spend time with you guys and I talk about teaching and simplicity and the things that you guys are going to go through, one of the things that really sticks out to me, and I've done a lot of work with a 21-3 large small trigger on my chart, and I thought to myself, I said, because new users, you guys, are starting out with two charts, right? You've got a 13-2 dynamic Renko chart on the left that has large and small triggers, and you have a 5-1 chart on the right. And my thought was, to kind of simplify the chart reading for new users, is why not superimpose the 13-2 large triggers on the 5-1 chart instead of an ambiguous 8-range large trigger. So that way you can see the trigger that's on the left superimposed on the right. I did add the 13-2 reversal bar marker. Some of you guys may want this. Some of you guys may opt to turn this off. But it's the exact same price or reversal bar marker, 39.18, on the 13-2 chart, so you know when there's going to be an up bar. superimposed on the 5-1 chart. So essentially your 13-2 and 5-1 charts are identical. There's just a lot more bars on the 5-1 chart. And that's kind of what I was going for. And the thought process is simplification for new users. If you're an experienced user and you've got your own chart set up and you've got it the way you want it, there's a lot of traders who do a lot of different things. And, like for example, I'll give you an example. This is one that one of the traders posted in this morning. He is running, 2 or 3 or 4 triggers on his charts because that's the way he wants to do it, and that's fine. There's no right or wrong. It's a function of reading the indicators properly. Once you read the indicators properly, whether we're going up or down and where we might stop, the rest of it pretty much takes care of itself. So what I wanted to do today, if you guys don't mind, is to spend a little bit of time actually on the read of the chart. And look, we'll go back. Did you guys see that little 8-minute video I made yesterday? If you did, great. If not, no big deal. But what I wanted to do is just kind of go back. We'll just go back to the beginning of yesterday, or I say yesterday, it was Friday. And just kind of walk through the chart together, and I wanted to give you my interpretation, my read, my thinking with this chart setup, and then you guys can kind of take it from there. Everybody cool with this? So, and then, 9:30, we'll start watching some markets and see what happens. So there's a couple of things that I put together that I think are going to be very significant, which literally, I gave this exact same lesson in 2014, and I gave the exact same lesson in 2020, and I gave it in 2008. Literally nothing has changed. And again, I want you guys to really understand this. If you double click on the indicators, or right click on your chart and go to indicators, inside of your synthetic triggers, the only thing that's different is that this would be an 8 range versus a 13-2. So it's not that much different. But I think it's going to make a lot more sense to you guys when you're looking at your charts. So real quick chart reading lesson. Everybody okay with this? And what we're going to focus on more than anything else is we're going to focus on small triggers versus the large triggers. And just to double check one more time why in the room that you can hear me, just making sure. All right, so there's a couple of chart patterns that you guys are going to have to be familiar with. And if you're a new user, this is going to be a very, very helpful thing for you. And I want you to remember this term, sideways. Whenever you see sideways things, and when I say sideways, I'm talking about sideways large triggers, sideways divergence, sideways multiple plots in the same area, divergence plots. Whenever you see sideways, this is the time where the market has a potential to go, at least make a retracement. Sometimes they'll make a reversal. I want to give you guys something really simple. Okay, we used to say X marks a spot. Now, I'm going to make an X here real quick and you'll see it, but X is where the small triggers break out of all the large triggers. We used to say X marks a spot a long time ago. It was one of the things that, I'm talking like 2005, 2006. But everybody else says they have sound except for hello, Safia. So I'm going to tell somebody. quick just to make sure we don't want anybody who's... Okay, I told the guys to get with you. All right. Anyway, all right, short version. I want you to visualize where the small triggers start to break above all of the large triggers, and I want you to think of that as either one of two things: trend reversal or no more trend trades, at least. Everybody okay with that? And another thing that we're going to focus a lot on is we're going to focus on the 5-1 large triggers. And we're going to focus on when these large triggers cross to the upside and they're physically above. You know, we made a... I'm going to pull up the user guide real quick. And sorry if I sound a little disjointed. I'm trying to think of the easiest way that we're going to present what we're doing. But again, look, I want to go back to the good old-fashioned basics. All right, everybody okay with this? If the small triggers are up and they're physically above the large triggers, we're doing long trades. Everybody okay with that? Now, the other thing that's in this picture is where the small triggers start to break above the large triggers, and that's really what we're talking about on our 5-1 chart. So there's a first break, and then there's a everything is going your way. And then there's a first break, and then there's everything going your way. And that's really what we're going to be focusing on when we look at these triggers. So I think this is going to be pretty self-explanatory. This is your 13-2 chart. and this is why I think the visual of having the large trigger on the 5-1 chart is going to be extra beneficial for you guys. Because you're going to see this, do you see where these circles are? On your 5-1 chart, this is going to be a flat, wide up, large trigger, and it's going to make a lot more sense to you, I think. We'll take a look. You guys are going to end up being judge and jury on what I'm doing here. One of the other things that, you know, again, typically will happen at the top or bottom. If it's strong up, you usually get a second push. Notice location of the small triggers below the large. Location of the small triggers below the large. Then we get obviously triggers inside of each other, and then eventually the trend comes to an end. So we're going to focus on this exact same trigger line patterns. Nothing is changing. I don't want anybody to freak out. Triggers are up strong. We're going to make another push. We get to fibs. When the small triggers are physically below the large triggers, which we talk about a lot, but you're going to see this a lot on the 5-1 chart. Everybody okay with this? So are the triggers above or below? And then obviously what are our areas, and then we'll find the trades after that. So we're going to read our triggers. And again, you know, anytime you have multiple divergences at a bottom, it has the potential to go up. Now, and I want you to keep in mind sideways, right? When the large triggers go sideways, when the divergences go sideways, when there's multiple divergences in the same price, potentially the trend could end. And again, small triggers getting above is our first indication that the trend is changing. The second indication is going to be when the 5-1 large triggers cross. And then ultimately, you know, the 13-2 triggers are going to cross at the same time. So we're going to think of, you know, our trading and the trades that we're going to do as being at triggers and areas, obviously. And we're going to think of it as price needs to be on the correct side of the triggers that we're trading. Does that make sense? So as we go forward, we're going to just look at the charts. And again, hopefully this is going to make visual sense to you. Right? So when we read our triggers, you're going to see strong large triggers, strong small triggers, and strong 13-2 triggers, right? The only way you can trade is going to be a long trade in this situation. Can we all agree to that? I mean, if everything's going up and we have support, you're going to be going long. Now, we could go through the rules if you want to. Let's take 10 seconds and just go through the rules real quick. Rule number 1. After a top or bottom or a breakout, we want these small triggers to be strong and located outside of the large trigger lines to look for a trend trade. Nothing has changed. So we even want our small triggers on the 5-1 chart to be above the 13-2 large triggers. Now, don't trade in any fibs that are going to hold. And then enter at, and again, this is where, you know, the rules don't change regardless of the time frame chart you use, or, you know, we're going to buy a pullback into fibs and triggers, or sell a pullback into fibs, mid bands, 1-to-1s, and triggers. And the trades are going to look exactly the same as they do in the user guide. Everybody okay with this? Nothing has changed. And everybody says, oh, a trigger line change, there's going to be change. And I want you to spend time with your charts, and I want you to get comfortable with it. But I just want to read the charts together with you and go forward. And again, this was Friday. And I want you guys to stop me cold if for any reason you do not agree or you do not understand. Everybody okay? Everybody practice one time. Say, John, wait, what's this? This is your class, guys. I know this stuff, so I want to make sure that you are getting everything that you need. Okay, so again, the market's going up, and I think, you know, as we progress forward through this chart, you're going to see the market continues to go up until we get to Fibonacci resistance. Again, I think the visual of these small triggers outside the 5-1 large shows a lot of strength in the market. And, you know, like always, when we get to a fib, we ask ourselves one question. What's the one question you have to ask yourself? Every single time. Same question over and over and over and over. It never, ever ends. There's only one question you have to ask. I'll type it out for you so you can have a copy of it, okay? How many triggers broke above the fibs? Everybody okay with this question? Because if the answer is 0, that's it. It's a termination condition. And again, you're going to get this to happen a couple times along the way. Or like right here, you're going to have to say to yourself, how many triggers broke the fibs, and, you know, should I be out of my long trade? And then you're going to move forward on the chart and say how many triggers broke the fibs, and it's going to be intuitive. Yes. Tim. I have sound in my ear. I can hear it through YouTube, so I know it's coming through. All right, so we're going to go forward. And again, you guys have seen some of this already, but remember when I used the term sideways? Sideways triggers, sideways divergences, sideways price action. All right, so some people are having problems. It's Monday morning, so you know somebody's going to have some issues with their speakers. Sideways price action. Everybody just say it. You're going to see the visual of sideways a lot. And again, sideways doesn't stop the market. Sideways is a pause, and the trigger line reading inside of sideways is going to be the key for us. So watch, we're doing trigger line reading. When we go sideways at fibs, I want you to ask yourself the question, where are the small triggers in relationship to the large triggers? If they're above it, it's going to keep going. So look, this right here is an example of the small triggers being above the large triggers, and it's going to keep going. I mean, it doesn't have to do anything, but traditionally it's going to keep going up. When the small triggers are physically inside of the large triggers, we have more potential for the market to go down. And again, as you guys move forward through the charts, and you know, this is one thing that scrolling through the charts doesn't help you with, but the more you do it, the better you get at it. Again, for us, we're trying to take long trades or short trades at areas inside of triggers, right? If the triggers and areas agree, you pretty much have a trade. I mean, that's the very, very short version of what we do. This is a 5-1 chart, Bobby. See up there at the top left? 5-1. And there is one little difference that I've tweaked up on this one. I'm trying to, you know, look, if you never, I want you guys to think about something for a second. If Nike still made the same tennis shoes they made in the late 70s, you wouldn't buy them, would you? They're not bright enough. They're not comfortable enough. They're not whatever. You have to always, in this business, you have to always look for a way to simplify what you're doing. Not complicate, simplify. And myself, over the last several months, I've spent a lot of time running a 21-3 small trigger on my chart because I love a 21-3 chart. And over the weekend, I was like, you know, I wonder how close a 21-3 small trigger is to a 13-2 large trigger. And you know, again, a 13-2 large trigger is very similar to a 21-3 small trigger. So I thought, you know, instead of having a third trigger line on the chart, which you guys have seen a lot of pictures of, right? Why not simplify it and just put the 5-1 chart 13-2 large triggers on there? Anyway, I did a lot of work, a lot of replay, and a lot of testing with this. And for new users, this is going to be a very simple, easy thing to do. All right, so is everybody okay with the, you know, again, we're going to do chart reading today. Trigger line reading, chart reading, and what should happen based on what I see right now. Because I think chart reading is 90% of what we do, right? So I think we need to spend a little bit more time with it. So everybody give me a Y or a no. You understand. Small triggers outside. All of the large triggers going up. We're going up. Sideways, flat at fibs with no triggers passed. We're probably going to stop going up. Or at least we have to wait for a breakout. Now, where's X marks the spot, guys? Just curious, right? I want you guys to be able to see these things. And again, it's not really a mystery because we paint the background red, but you see how the small triggers are breaking below the large triggers here? And technically below both triggers. That tells us the top is probably good. We're going to make a little bit of a move. And you're going to see a pattern that happens a lot. And I know you guys have studied my momentum trade a lot after Thursday and Friday in the class, right? And I'm talking about going short at the first area like a mid-band or something. I know you guys have studied that a lot. There's one piece that I forgot to tell you guys about. If you get a divergence, you have to get the hell out of that trade if you're in it. You'll see it happen a lot, and you'll see divergence will almost always take you back to the large triggers. So if you're going to hang in there, you're going to end up losing money. Or so if for some reason you guys did the momentum trades, make sure that if you get divergence, you get the hell out and start looking for a trend trade. Fair enough? You'll see this pattern. Watch. We'll see it 50 times, and you'll see. So again, look, trend trade short. Can we all agree? I I mean, without even looking at two charts, since we have our 13-2 large triggers on here, would you guys agree that this is a trend trade? Pivot, stop out, large triggers, fibs, everything's down, everything's strong. Pretty easy, right? Now, as we progress to the downside, obviously we're going to get the same look several times, right? Triggers, mid-bands, fibs, and we have to ask ourselves questions. And again, watch, I want to point to some of the nuances in the trigger line reading that you may or may not be aware of. Answer one question. Where are the small triggers relative to both large triggers? They're below, right? Remember what we said in the user guide. I'll pull it back up just so you guys will revisit the user guide, since it's a fair thing to do. In the user guide, when we're talking about trigger lines, remember this picture? When it's going up strong, you almost always get a second push. And you'll see this, you know, in a lot of charts. If it's going strong outside, you almost always get a second push. Well, you can use same, and then notice small triggers are physically above the large triggers and we get a reversal. So location below, we usually get another push. Location above, it's usually termination. Everybody okay with that? So when you look at your chart and you're saying, okay, I don't know what's going to happen next. And of course, nobody ever knows what's going to happen next. But you have to be able to read your chart and say to yourself, are we going to go down one more time? Especially, you know, if we have farther fibs and the bigger charts and stuff like that. You see how the triggers are outside all the large triggers? It's a good bet you're going to get another push. Now, when we get that second push, answer the same question again, and you'll see how simple this is. Where are the small triggers relative to the large triggers? Inside. Everybody agree? Now, what was the other question I told you have to ask yourself when you get to a fib? How many triggers are above or below the fib when the small triggers are inside the large? So you can ask yourself that exact same question right here and say, how many triggers, you know, and again, this is the difference between the experienced users and the inexperienced users. The inexperienced users are like, no way, I'll go short again. And, you know, they'll miss that 5 points. And the experienced users are like, no, it's so strong, we're going to get another push and get to the edge of fibs. So, again, the more you see this read, the more comfortable you'll be. And look, doesn't mean you can't lose a trade if you go short. It just means, remember what Mark says all the time and the user guide says and the manual says, odds favorable momentum. Well, before the retracement, this is what it looks like. So before it goes back up. So you're making your assessment on the low. What's the momentum of the triggers versus the triggers versus the triggers, and what's the location? And that's how you come up with one more short trade. Now, as we reach the low again, you know, again, I like doing the right edge of the chart because this is what it's going to look like for real. Instantly, you can see the small triggers are inside. So we have fibs, small triggers inside, a pivot stop out at the edge of fibs. And those are the types of areas that could potentially reverse the market. You don't know what's going to reverse. If you knew that, you damn sure wouldn't be sitting in here listening to me, would you? You'd be out doing your thing. So we're learning. And again, it's not a long trade, but it's a stop going short. Now, as we progress through, remember what I said about small triggers getting above all of the large triggers. It's your first visual clue of, hey, things might be turning. Now, you're not going long at resistance, are you? No. But you're not going to be doing trend trade shorts. So think about the rules for a trend trade short real quick. I'm just going to go through it one more time because you can't ever go through rules enough times. The rule says enter at fibs, mid-bands, 1-to-1s that are located inside of the large triggers. Inside. So when you look at a picture, right, we're looking at our large triggers and we're saying what Fibonacci lines are inside the 55 exponential moving average, which is the mid-band, the fibs, the 1-to-1s, areas inside of the triggers. Now, I get this trade a lot from a lot of people. I see them post a lot, and it kicks their ass 9 ways to Sunday. They'll go short right here. I'll make a yellow circle just for fun. Now, I want to ask you a question. If you go short up here, are you inside of your large triggers, or are you above your large triggers? Very simple. You're above. Not only are you above your large triggers, but say it out loud, you're above your small triggers. And that is how people start guessing at where a top might be. So I'm going to go back to 2014 and give you a quick lesson that we did this last week, but you know, you can never pull out the oldies and goodies. You know, you can never have too much of this stuff. So again, look, this is from 2014. And the only reason I leave it is just because it's funny, because it's so damn old, but it's true. I want you to read what this says. If the triggers cross down and the bodies of the bar below the small triggers going down, the market almost always goes down. I mean, we kind of make a living on that, right? If the triggers are going up and the small triggers are above, then the market usually goes up. And then eventually, when the triggers roll over and they're going down, the market goes down. Is everybody cool with this? Everybody give me a yes for sure. I need to know you understand this. This is your small triggers. This is not a small chart. That was a 24/6 chart, but the theory is the same no matter what. And when you guys are going through our rules and you're going through our continuation trades, what's the rule for a continuation? You got to have the small triggers going down to continue the trend. So watch this. After you hit a fib and the price gets above all the triggers, you're not going short, even if you think it's going down. When you're above the small triggers going up, you have more of a chance of the market going back up. And again, I'm just going to point out one spot. Where is the resistance, sideways action, when the small trigger is going down again? So if you were going to take a continuation short because of your 21/3 chart, you guys understand what I'm saying here. Let me make sure. Let me not embellish. Let's just say hypothetically, well, we'll go to the same exact spot. We'll go back to yesterday or Friday. Let's just say hypothetically that was this spot. And you were saying to yourself, you know, I want to do a short trade because of my large 21/3 chart. Is that fair? So you have this look and the market goes up a little higher and you're like, okay, I want to go short. This is where you hold your water until the small triggers roll back down, and then usually you'll get a better shot at it. Anyway, if you're doing edge trades, we're not going to go through edge trades, but there's another 5-minute video in the user guide. I know it's crazy, like all the information you need is in the user guide, but this video on triggers, where the heck is it? There it is. This 5-minute video on Fibonacci and trigger line reading goes through exactly what it takes to do continuation trades in the video. And this is it, short version, right? If you get to a fib, wait for the triggers to roll up and be above the fib, and then you can go long. You can watch the video later on your own, but you guys have seen that video, right? I'll put a link in there just so you guys have it. Anyway, short version is, if you're going to do continuation, that's the idea, is wait for the small triggers to roll over, and then resistances will usually hold. Now, for the trend trader, you don't want all that monkey business, do you? Right? It's too much. So in the beginning, you're doing a trend trade. You know, what you want is the ultra heavy duty grouping. You want that type of grouping with that type of trigger, that type of grouping. And then eventually, you know, if the fibs break, which, remember the question we ask ourselves at fibs, how many triggers broke through? Whenever the triggers break through fibs, we traditionally get another push to the downside. So again, there's your breakthrough, and then, you know, ultimately it doesn't go down all the way. We end up, if I remember correctly, this was a pivot stop out on a 21-3 chart. A termination condition on another chart. Anyway, doesn't matter. We're just going to read the 5-1 chart for now, and we're going to make life really, really simple, okay? The only thing you need to know is that if you went short here, or let's just say here, fair enough, without the benefit of termination conditions, that your party is going to be over where? I'm giving you the X marks the spot where you're totally screwed on your short trade and you're going to have to be out. Can you see it? If I was to draw X marks the spot and higher divergence, isn't that the end of the down move? Not only from the trigger lines, but from divergences as well. So the trigger line, small trigger gets above everything else going up, and you have a higher divergence. You want to know what's really going to blow your mind? For the over anal retentive, crazy, I got to go look at things. You ready? I spent time for about an hour and a half drawing rays on the chart, which is F3, between the two lower divergences. You know, so it'll be a trend line that extends out to the right. Very interestingly enough, it actually holds support a lot. Anyway, I digressed. Okay. Let's go forward on our chart reading. I'm sorry I got distracted. Is everybody okay with the idea of this? It may end your trend right here. It's a higher divergence with the small triggers getting above the large triggers. Everybody cool? Give me a thumbs up. Happiness. Everybody cool with that? Now, what does that mean? Well, if it's a termination condition on the larger chart, right? You guys have studied this a lot. Haven't you taken the first mid-band and fib as the momentum trade to go to the upside? Now, I want you to notice the 13-2 large triggers and the 5-1 large triggers are all up. Everybody agree? So, again, if you do that first momentum trade without the large triggers, remember we said it back over here, you're going to see this pattern a freaking lot. So I'm just going to highlight it again. If you do the first little momentum trade because of the small triggers, if you get divergence, what almost always happens? We almost always make it back to the large triggers. So if you do a momentum short, if you lose momentum, get the hell out. That's the rule. Everybody cool with that? If you're in a momentum short and you lose momentum, get the hell out. And you can see closing above all your trigger lines is pretty much losing momentum. Anyway, all right, I digressed. Now watch. Patterns just repeat themselves so often. So let's just say, hypothetically, you said, hey, look, this is a great termination on the big charts. Everything's going strong. Triggers are breaking above the fibs. I'm going to take that first long trade because everything's up. Why not? Just remember that if you lose momentum, they almost always close the gap back to the large triggers. Now, I'm just going to draw a box in. K-Dog, today's day one of simplifying by adding a 13.2 large trigger versus the 8 range large trigger. Since new users only look at 2 charts, I figure why not have the same triggers on both charts? Makes life easy. Simplify. Anyway, if you get divergence, you usually make it back to the large trigger, so it's not going to be overly suspicious if you see it happen and then the market goes back up. You're going to see this a lot. Now, remember the word I said earlier. What's the word of the day? Sideways. Pivot stop outs, multiple divergences, fibs, sideways. Usually we get termination conditions. Now, visually, I want you guys to see it again. Notice where our small triggers start to get below all of the other triggers. Right? This is just a visual that says, hey, wait a minute. You know, we had a good top on larger charts and we've got strong momentum. And this is the spot where traditionally, you know, you can get that first short trade, which we did this one on Friday, remember? Anyway, I did it in replay too, but we did that on Friday. Now, it's not a trend trade. And look, I don't even have to look at my 13.2 chart to tell me why it's not a trend trade. Why is it not a trend trade, guys? The rule number one for a trend trade on a 5-1 chart is what? 13.2 triggers have to be crossed down. Tell me if I'm mistaken on that, but I'm pretty sure I wrote the rules. So, if rule number one says both triggers have to be crossed down, large and small, then what we're looking at right here on our chart is not a trend trade because the large triggers aren't crossed down. Would you guys agree? See how they're green and crossed up? So depending on the quality of the top, you might get a high volume trade or a first momentum trade, but it's not a trend trade. A trend trade will happen after the large triggers are crossed down. So look, for grins and giggles, can you guys see this is big enough? This is the spot where the large triggers cross down on the 13.2 chart. Yes, does everybody see it? They're red and cross down. That's a trend trade because your large triggers on the 5-1 chart are down, your 13.2 large triggers are down. That's a trend trade. Visually pretty damn easy, don't you think? So anyway, look, if you got the first one, which we did on Friday, I remember it, and then we said we got to hold through a pivot stop out. But if you really waited for the trend trade, this is it. Multiple fibs and triggers, small triggers below, and then you get a second trend trade, which you guys saw this in my replay video, right? Both large triggers down, mid bands, 1-to-1s. Everybody agree? Trend trade short? Pretty obvious, right? And then you guys remember what happened. We had news at 8:30 on Friday. So as you go back and you look at the chart, again, there's some areas where you have opportunities. So I'm just kind of squeezing this up, see how much I can get away with. So we had trend trade short opportunities up here with all the triggers going down. We had trend trade short opportunity here with all the triggers going down. We had continuation short, which we're not really talking much about. And then we had trend trade, but had to manage out. And then momentum trade, one more trade, and then we had termination, followed by momentum trade, followed by trend trade, followed by trend trade. Now, I ran that in market replay. Did you guys see that? I did all those trades in market replay the other day. What the hell? I made a little video. Did you guys see it? You can scroll up and watch the video of it. But, I like to record myself doing market replay because I can go back and see what the hell was I doing. And I did something that was right and I did something that was wrong even myself in market replay. And I laughed because I was like, my brother's like, I sent him a picture. He's like, what the hell is that? I'm like, it's a continuation trade when I didn't wait for the triggers to roll. And he was laughing at me because, again, I had broke a rule and he's over here picking on me. All right. I lost my spot. Sorry about that, guys. All right, can we keep going forward? I want to do chart reading first because I think chart reading is such a cool exercise to do with everybody. All right, I've lost my spot. It doesn't matter. So this is the 6. This is 8:30. This is where we were talking about. No. That's all 8:30. Remember 8:30 was just like batshit crazy. It went gangbusters. So I'm going to skip forward a little bit until we get past like 8:35 because, it's just too damn crazy with news. So as we go forward and we get to 8:35, I mean, they were whipping around 9 ways to Sunday, right? So, at the moment we have fibs, but we have triggers up and it's a mess. And ultimately, what we ended up with on Friday was every trigger line up and triggers getting beyond the fibs. And we ended up with a market that obviously trended up significantly to the upside. Now, I want you guys to watch this, okay? Is everybody okay with that? We hit resistance and then everything kind of broke through. And again, that was the first spot where it might have kept going, but there's the second spot. And again, we're only looking at triggers. Large triggers on the 5-1, small triggers on the 5-1, and 13-2 large triggers. I want you guys to tell me when the uptrend stops. So just watch from the box and tell me when the triggers get outside. Did they get outside? No. So we made it to a fib. We got above the fib. And what happened? More up, right? We made it to a fib. Now we get a little bit of sideways action. Remember the whole sideways thing? That's the sideways price action where you're saying to yourself, where are my triggers? How far are they past the fibs? Are we going to get another push? Now, do you guys remember the trick that I gave you guys earlier about not getting in on the wrong side of your triggers? Even if you could go long, but again, this is a difficult long trade when you're on the wrong side of your trigger lines. Because when you're going long, look what it looks like. This would be the spot where you would say, I'm going long at the midband. That's a very difficult long trade because you have divergence at fibs and things are going sideways and you're below all of your triggers. Now you get away with it. But again, that's a more difficult trade. I want you guys to think about trades where the small triggers are on the correct side of the large triggers. A lot of unneeded stress, absolutely. All right. So, again, look, when does it happen? It happens eventually. You know, in a strong market, usually divergence will kind of kick things off. And again, we go up, but there was no trade setups initially. And again, this is the last spot. Should be above the large triggers. Yeah. So look, this is, I think we can agree that after a breakout, this is our last spot for going long, right? And again, you don't know it's going up, but you know, in a strong uptrending market, you're compelled to take a long trade here. Everybody agree with that? I mean, you have to, right? There's no reason not to. And this is the visual before you're going long. So somewhere between 71 and 72 is kind of your window. Again, it bounces up, and then you have to think about managing your position. Now, before you start managing in or out of a position, whether you choose to stay in or choose to stay out, I want you to do one thing and one thing only. What do the triggers say? In this situation, are the small triggers above everything else, or are they below? Because if they're below, you have to get the hell out. And if it goes up, it's not your money. Does that make sense? If you're long and you have divergence, you're reading where your small triggers are relative to the large triggers. Everybody give me a why if you understand that. If the small triggers are up and above all the large triggers, you're going to say, screw you, divergence, I'm staying in. I'll show you an example in our material. Because this is a very, 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 very important concept when you're looking at divergences. And I know we have it in our management material, but the more you see it, I think the better, you know, the better it will be for you here. So look, let me open a picture. Does everybody see this divergence right down here? So I just want to make sure we're pointing all at the same spot. This little negative 85 right here. Ask yourself, and again, look, it's kind of written out for you. When looking at divergence, compare your small trigger location to the large triggers. There's no chance of our small trigger lines breaking above the large triggers. As such, divergence will get you back to your large triggers, but that's usually where you go short. Now, when the market's sideways and the small triggers are inside or above, that's the end of the party. And again, you'll see this when you read charts, right? And again, I have to go back to the right edge of the chart. You are compelled in a strong uptrending market to buy this area, right? Even if you lose. Now, you're not compelled to stay in forever. And again, when you start to really get comfortable at reading small trigger line location, you're going to say, hey, it's a no-brainer. I got to get out. And if you held on for dear life, look how crappy it turned out for you, right? We don't want to hold on for dear life. So again, X marks the spot, right? Once the small triggers get below everything else, you're going to have to really think about managing. I'm not necessarily saying go the other way, but now I want to ask you guys a question. A lot of people get stuck in this, right? You get a fib support, you start to get a little bit of a breakout. Is this a trend trade long? I want you just to look at these two charts and tell me if that's a trend trade long. And remember, trend trade long says 13.2 large triggers have to be crossed up and wide. Which way are the 13.2 triggers crossed right there? No, I mean, that might be too much. You know, almost every trend trade, Tim, has the small triggers red when you're going long, right? I mean, that's just kind of the nature of the small triggers. So you can't say I'm not going long because the small triggers turn. It's small trigger line location before you get in is the key. Does that make sense? They can turn, it's okay. Sometimes they have to turn in order to get down to the right spot. Small trigger location is key to whether you're going to take another trade or not. Small trigger location is key to whether you take a trade or not, or whether it's an easy trade or not. And again, as we progress forward, you know, look, I think prior to this area, small trigger location said you have to take a long trade, which is cool. And then it changes. Small trigger location says you got to get the hell out of your long trade because it's not going to work. And, you know, look, ultimately, we made it down to fib support. And fib support holds. And again, this is a very common, you know, situation. If fib support holds with divergence, we'll probably get back up to the large triggers. Now, they overshot the runway a little bit. But the trick is we're not going long here when the large triggers are still crossed down. So the large 5-1 are below. The large are below. So we're not going short or long, excuse me. Well, what is a trend trade? Trend trade is large triggers on the 13.2 and the 5-1 chart. Agree, right? Alex? I'm not talking about trading anything. I'm just talking about chart reading. We're just talking about what are the trigger lines doing and what do we expect. So there's not a trade there. Just chart reading. Is that a fair assessment? Right? Trend trades for us happen when all the triggers are all going in the same direction and everything is obviously perfect. Right? So whatever this is. See, like that? That's a trend trade if it happens. Everything's going, the small triggers are down, everything's going your way. That's your trade. Hopefully you get a fill. Because that says we're going down for sure. Right? So there it was. Your pullback. Trend trade. Now, second divergence. You see what they do. They go stop people out, right? When they stop people out, do you take a second trade? How are you going to know? Well, you got to look at your large charts. You have to look at your small trigger line location. Tim, I could pull up a 13,000, 2,000 Bitcoin chart and it's the same read. Small triggers above or below the large, going up or down. I'm just looking at this one chart for the moment. So watch. We'll take it live. Okay, so look, this is live market, S&P. Since it's 10 o'clock, we'll go look at the live market. So we're going to start first with our 21-3 chart. And again, I like a 21-3 chart. You don't have to, but remember what we talked about starting the day. You know, we've got a very sizable uptrending market. Everybody cool with that? I mean, it's going up. So, you know, again, the big trend is up and, you know, for all intents and purposes, at 3 o'clock this morning, the mid-band holds. We break out of fibs. We break out of fibs. The mid-bands and fibs hold. We're still going up. So we're pretty much biased to the upside for the most part. Everybody agree with that? Just looking at the larger chart. And it's pretty straightforward. We're going up. So since the large charts are going up, what we want to do is we want to find opportunities on the small chart that says, let's go long. So we have, you know, again, places where that could happen, mid-band and fibs, over here at fibs, over here during a pullback, maybe more, but we'll just leave these boxes on for now and we'll see what we have, okay? So let's look at opportunities on, you know, 13.2 and 5.1 chart. So 13.2 chart first. Can we agree that we had basically the mother lode of fibs and mid bands over here? I mean, it's not super pretty, but it's pre-market, and they're not always heavily trending pre-market. But it's support, and we're going up. And it's support, and we're going up. Ultimately, look at the difference between these two pivot stop outs. This really ties into what we were talking about earlier. The first pivot stop out, small trigger versus large trigger location. Pretty strong small triggers the first time, yeah? And then they're okay strong the second time, and then they get weaker the third time. And there's a lot more room to get back to some areas the third time. And again, all we did was go down and get to a 21.3 spot. So again, could you have taken some shorts along the way? You might have. We'd have to go back and check and see what's what. But after a pivot stop out and things roll to the upside, we're basically looking for long trades, right? In an uptrending market. In an uptrending market, pivot stop out, triggers roll up. It's going to be long trades for the most part. So let's take a look and see how this 5-1 chart handled things, if you guys don't mind. All right, so we'll start where I drew boxes, okay? So obviously we have termination conditions on the 13.2 and 21.3 chart at these areas. Now, conceivably, I think it would be a reasonable expectation to do a trend trade long right there, don't you guys? I mean, you don't know they're going to go down that far, but that's everything on the planet from 2-3 fibs, large triggers, fibs, mid bands. I mean, that's the mother lode of trend trade looks. And, you know, again, it bounced, but if you put a stop below the pivot, they're going to get you. And they did. They would have got you. But they would have got you right to you know, the edge of fibs, which is frustrating sometimes, but sometimes you have to do a trade more than once. Now, what did we say earlier about the small triggers needing to do before we go long again? Well, the small triggers need to roll back up, right? So again, could you have taken a second shot there? I bet you somebody did. Now, you'll notice that it's the same exact trade on the left as it is on the right. Look, this trade is the same trade over here on the right. You just had to do it a second time. All right, Mark, let's see what you got. Yeah, that's the exact same thing, isn't it? Exactly the same thing. So you're compelled to do the trend trade and you get stopped out. And they just go a little lower to get to the edge of fibs, and then you have to buy after the small triggers roll over, and then they give you all your money back. Not a guarantee they give it back, but it's a pretty good bet that they do what they're supposed to do. Does everybody understand his example? Now, the benefit of the S&P example we were looking at is, again, you had an opportunity to manage your position after, you know, the market makes up bars. So if you got in on the way down, you could have a very small stop. You don't take a full loser here. All right. Now, triggers roll up. I think everybody can agree. You know, we have all three triggers going up here. So if you did it, cool. And then This is 9:30 at the open. Most people don't trade right off the open because it gets a little bit squirrely. But remember, we had our 13.2 chart saying termination conditions and nothing but. So what we want to do is we want to find an opportunity to go long that makes sense. So, again, when we have a bottom, that's great, but we need, we need a reason to go long on the smaller charts. So until the small triggers get above, like right there, you don't have a reason. See that? So, after they start going, then you start building reasons on why the market can go back up. Again, that was first one, and then second one. Here, I was at the wrong spot. Bear with me. Okay, that's the 940. All right, remember what we talked about, guys. Again, good low. Remember that pattern I told you guys, especially you guys who are doing the momentum trade? If you do the first momentum trade, divergence will ruin the party. And it's not that it'll ruin the party, it just comes back a lot deeper before it goes up again. Is everybody okay with this thought process? That we had a good bottom on our large chart, pivot stop out, and then the small chart comes along. And this is what we're looking for when we're trying to buy, the first long trades going out of the bottom. Either the first momentum or the first large triggers rolling up, pivot stop out, high volume areas. How is the read on this to you guys? Does it look semi-obvious? We made a bottom. We've got 32 blue lines. The large triggers on the 5-1 chart are going up. Did anybody do this trade? Just curious. All right. As we progress, and we're going to get up to real time here in 2 seconds. All right. We are now to real time. All right. Let me take a look at the trades you guys did do. Tim. All right. Why is this one? The hell? Did they change snag it a little bit? Let me sign in. There we go. All right. I figured it out. All right. So to go full chart. All right. So Tim, you had a short. They got you. Based on the look of no more short, small triggers above the large triggers, you went to the 5-1 chart and got a long trade. Okay. So quick, easy first target, first fib, second target. Obviously, they kept going. Nice job there. All right. Next chart, let's take a peek. All right. Okay. What do you see on your 13.2 chart that causes a little bit of issue? Again, this is one of those tough ones where you're getting long below a 1-to-1. makes it tough. It's not necessarily the wrong trade. This is the easier of the trades. Obviously, maybe you weren't there at that moment in time, but right, that's everything going up, everything on the 5-1 chart going up, and then we hit a target of 76.10 area. And again, just, you know, there's a little, you know, and I hate to say it's the wrong trade. It's not the wrong trade. It became a what's called 50-50 trade. This happens a lot even with one-to-ones. You'll get a 1-to-1, and then you'll get a little bit past it, and then you'll get back above it or below it, and then it eventually holds, right? It starts off breaking, but then eventually holds. And I think you kind of got that same thing here. So I don't think it was wrong. It was just a little bit more difficult. They just went a little lower. You had to do it twice. That's the problem. Now, guys, this is live. Again, remember the word sideways. Whenever you start to see this sideways price action and pivot stop outs, you have to take a look at your small triggers and say, where are they in relationship to the large triggers? And again, anytime you get this sideways action, you have the opportunity for the market to put in a top, and not only put in a top, but go a little bit deeper because of, and they don't have to go deeper, but because of the location of the small triggers here, we're probably going deeper. All right, let me take a look. All right, Tim. So Pinsky, we got yours. Mark, we got yours. Tim, we got yours. NG, let's take a look. All right. So crude oil, lots of fibs, lots of resistance, lots of triggers coming down. How did this one end up working out? I mean, it's the right look for momentum trades. And again, for me personally, this is where, you know, when the market flow signal happens, usually a couple ticks stop above it, and then that's about it for me. All right. So target one hit, stopped out. Okay, cool. All right, we're going forward. All right, Pinsky, we got yours. Alex, the rules for a trend trade should be true if you're going to do a trade. The rules didn't change. I just slowed the trigger down a little bit. And look, you guys don't have to have this if you don't want it. You guys do realize everything is optional. I think from a new user perspective, this is, you know, you could plot any trigger line from a 34.5 chart to a 21.3 trigger line to a 13.2 trigger line, and they all are going to work at different times on the chart, right? When the fibs and triggers line up. So there's no wrong way, whether you use an 8 range large trigger or a 13 range large trigger or a 13.2 large trigger. or 21.3 small trigger. All right. Yeah. So let me ask you guys a question. Is this a trend trade right now? I'm just going to take a quick snap and just so we could freeze it in time and you guys can answer the question. I don't know what you said, NG, or what you typed. Tim, all right. I'm glad you said maybe. What are the rules for a trend trade, guys? I'll go through them with you. You ready? Here we go. This is going to be very helpful for new people. Let's talk about trend trade rules. The number one thing for a trend trade, the number one rule is that your large and small triggers have to be traveling in the same direction, and the small triggers have to be going up and the large triggers have to be going up, or large triggers going down and small triggers going down. Both triggers, same direction. Everybody say yes, I got it. So the reason I froze it in time is because it's a trick, right? It's easy to see when somebody points it out to you, but look, this is your 13.2 large trigger. Now, would you guys agree with that analysis? The 13.2 large trigger is crossed up and it's above the fibs. So that's not helping us do a trend trade short. This is where a lot of new people get in trouble because they do the wrong read. So if you were thinking it was a trend trade short, you were mistaken. But I wanted you to see why. Visually, I think this is going to be very easy for new people with trend trades. And again, I'm not saying it can't roll eventually, but you know, we've got this sideways area that we were talking about, which again, just became a pivot stop out on the larger chart, right? The 13.2 chart. So this is, you know, again, this goes back to the very freaking common. You have a strong push up, you have a little retracement, and then on the second push up, what do you see? Where are the small triggers relative to the large triggers the second time? Would you guys agree that the small triggers are well below the large triggers the second time? So we have a much better chance of the termination at the top being a good termination. Does that make sense? The first time, there's no way to know it's going to go down. It's strong up. That's why it bounces back up again, because, you know, this is just a retracement and the rest of the world's looking for a spot to buy. Now, once we reach that last high, now we have to make some big decisions, right? Do we want to go long after a double top with not great triggers? All right. We'll watch it live together. Do you see how the large triggers are going down here on the 5-1 chart and the 13.2 are going up? Remember, Mark talks about the battle between buyers and sellers a lot. We're in a battle zone. If they break the high, there's not a lot in the way, and they're probably going to keep going up. If they can't break the high and then they break the recent low, we'll probably keep going down for a little bit. The fight. Okay, the fight. All right, there's a fight. But you can see it in your trigger lines, right? You've got resistance lines of divergence. You've got support lines of support. We have an uptrend. Do you want a tiebreaker? What do you guys think? Is that a tiebreaker? Now, you're not doing 5-1 trend trades because of this. But we're still leaning to the upside, and 68.50 is probably where we'll end up eventually. We'll see. All right, guys, do we do trend trades after a pivot stop out? Yes or no? I know you're all itching to go long, but you would be breaking the rules, correct? No breaking. And look, here's another thing. Did you guys watch that September 26th video that I did or whatever? This divergence on the 5-1 chart now suggests that the pivot stop out on the 13-2 chart is good. That's the one of us. But it's this divergence on the 5-1 chart that now agrees with what's happening at the pivot stop out over here. That's usually the precursor to a good top and then, you know, some type of pullback that takes us down to the lower levels. So can I ask you a question? Let's just assume we're going to go down. I'm not sure if we're going down or not, but we'll see. But could we start picking a target to the downside if we do go down? What do you guys want to call your target? Would this be a fair target down here? I mean, if you're going to go short because everything's going down, you got to know where you're going. So would this be a fair target? Somewhere between 47 and 45. So we can see the top. We already know it's, at the moment, a good top for now. Right? Double divergence, pivot stop out, triggers rolling. Remember the whole X marks the spot thing I was telling you about on the 5-1 chart, where after the good top, small triggers are getting below the large. See that? So worst case, you're not going long, right? Everybody okay with not going long? Hopefully visually that's pretty easy. Now, as far as the short trade, you know, what would it take for you to do a short trade? I mean, realistically, what would you need to see? Would you need to see a deeper retracement, or are you doing a momentum style trade? There's not a lot of resistance areas in between our large triggers, is there? I mean, mid-band and fib kind of right here, but that's about it. All right, for anybody who misses their 8-range large triggers, I offer this. A generic chart, generic range chart with a market flow. You know, I've started running the generic chart instead of the one that has all the fibs, just because it's cleaner. I mean, you still get fibs, but just from an 8-range chart. But you can see what happens. Bruce, if you're around, you know, this is the spot where we had divergence on the 5-1 chart. And we already had 3 divergences on the market flow chart. But you can see, I mean, we're pretty bearish from the pivot stop out on every single chart. These are very bearish looking market flow bars. All right. Would you guys agree that if you had 13 two large triggers going strong and small triggers going strong, you could do a trend trade? And you could see how visually, I mean, to me, it's obvious that things are rolling to the downside. And this is the, in my opinion, obvious spot window for a quote unquote trend trade attempt. Now, if you guys also notice on this chart, I added the 13-2 reversal bar marker on the 5-1 chart. You don't have to have it. You could just turn it off if you want. I personally like it because I use it in my trading plan to tell me when I can do momentum trades going the other way. Right? So for me, my rules for a momentum trade, and again, let me go through rules. Never hurts, right? Remember we talked about this Friday a lot, Thursday and Friday. But for me, if I have a good top or a bottom, and I'm sure it's a good top or bottom, then I can do a short trade. And again, look, my rules say I have to have divergence on a 5-1 chart. My rules say I have to wait for a 13-2 down bar, and that's why I have the reversal bar marker on my 5-1 chart. And then if I was going to do it, and I prefer it to be a lot of resistance up top, mid bands, fibs, 1-to-1s. If you're not from fibs, which we're not on our charts right now, the trend trade is probably the more easier of the trades. Now, what's the line in the sand where we shouldn't get above, or else we're going to go back up again? Give me a price. Just when you look at this, give me a visual price where you say, if we break above this price, we'll probably keep going up. Eh, 54.5, 55. That's the upper end of the window. All right, so this is our first kind of run at the new visual. And again, look, if you're looking at an 8 range large trigger, you've already got your 8 range large trigger right there, right? So again, I wanted to test this new visual live. And again, look, this is the spot where, again, if we're going to see a bounce, this is probably the window it's going to happen from. Now, the only downside to this, and again, look, it could win, it could lose. You guys want to do one? Here. Oh, man, that's a shitty fill. I thought it was actually at 52, so it obviously jumped real quick. So what do you guys think about this visual? It's not too bad, huh? Again, they're probably going to come back here and stop out that high by a tick or two. But, one of the things that, here, I'll just leave it. I'll leave it right above there, even though it's probably going to get bumped out. Is everybody okay with this? I think realistically, you should be short at 52. I said that we're going to stop out this high pivot And the reason why I said that is because of the market flow chart. Anytime you have this high volume line, they stop out the high pivot. And then they go again. They're going to end up going down still. There's no reason to be stopped out of that. But if you were holding on, you know, now a more realistic stop. Here, watch. I'll see if I can sell one. That's a more realistic stop. Now, don't mind my fills. These are really shitty fills. But do you see where I'm saying? You give it the chance to stop out, and then you get your opportunity to... Anyway, probably going to end up getting bumped out just for the simple fact that this is what we're fighting right here, guys. Remember how we said we're uptrend? Yeah, it's okay. And again, if you don't use a large chart, then this is your spot. You take a little bit of a loser and then you wait for something different to happen. It's okay. The only downside to this one is that the triggers were above our fib. They weren't below the fib, which you'll see be a lot more beneficial. For those of you guys that lean on a 21-3 chart, you're not doing that trade anyway. And it's okay. I don't mind, you know, we'll take one, we'll lose it. It's okay. Now, I want you guys to tell me when it's okay to start going long again. Yeah, I mean, it would have been nicer for it to go down to 45 and then start the up run, but the 21-3 chart's not having any of it. All right, guys, visually, you see it? I mean, obviously, they're not going to be nice and come back at this point, but. Watch. This makes a lot more sense when you look at it this way. Again, in a strong trending market, you can see this was pretty much financial suicide going short. It doesn't matter if you lose or not, guys, as long as you learn. I mean, if you're trading real money, that was not real money. I was not do that with real money. That was simulator, so it doesn't count. It counts, but it doesn't count. You know what I mean? It doesn't cost. All right, so can I ask you guys another question? With the large shorts going up and everything going up, is this the apology for your trade? Again, can you go long now with a trend trade to the upside with all your triggers going long? I ask you the question. So here's where you have to debate amongst yourselves. So what's the difference? Let me give you a for instance here, just for fun, okay? I'm going to take a snapshot of it. And again, you guys can go through and figure out what is best for your trading plan. So you're asking yourself, each time you get a pivot stop out, you're saying, can I go long after a pivot stop out? Is that a fair question? Can I go long after a pivot stop out? So, in both situations. So, if I read this pivot stop out and I read where the trigger lines are, what's the answer to the first one is, no, I should not go long due to small trigger location versus large. And is that a fair assessment? Now look, support's held, everything's going up. Where are my triggers? You know, again, where are my triggers this time, and what's the strength and direction and momentum of them this time? Can I go long after a pivot stop out if everything is nuclear strong to the upside? So it's the same thought, you know. And again, those of you who use a 21-3 chart say long is the only way you're going to be going until we reach 68.50. If you don't use a 21-3 chart, you know, and you went short and you had a loser, it's okay. If we were down at 45, you'd say, yay, I went short and made 6 or 7 points. All right. New challenge. Can you go long if you hit a 1-to-1 and stop? I honestly don't think we're going to stop until we get to 68, but who knows what's going to happen. I think the visual is good if they would ever freaking pull back, right? Yes. See, this is where you're like, everything is so obvious and the answer is yes, and you're just waiting for a pullback. And again, look, this was first little battle to the short areas. You know, the large shorts went out. That's okay. If you do any of the other trades during the day and, you know, that's not your first trade, then that's okay. If that's your first trade, then you're like, damn it. Usually when you have a short look that reverses, they give you an apology. I mean, like 8 out of 10 times they'll go up, they'll come back, and then they'll give you the apology long trade. They're just being a little rude right now, not giving you one, but most of the time they give you an apology. All right, as far as trend trade rules and buying support at triggers, would you guys agree with my box there on the 5-1 chart? That's pretty much the spot, right? Good. I'm going to take a 2-minute break, pause for the cause. I'll be right back. I want you guys to, here, I'm going to put the F on just in case things really move. Let me know if you have questions. Let me know if there's anything you guys want to go through. Where is apology in the notes? They're not in here now, but again, the one thing I said about this short, which again, it's okay. See how all of the large triggers are physically above the fibs here? That was our 50-50, may not be so good. If these large triggers were down below the fibs, it'd be an easy short. But you kind of see the same thing over here. Triggers stay above that fib and it goes up, and triggers stay above that fib, it goes up. And again, not justifying anything, just pointing it out. And the overwhelming 21-3 chart really suggested too. But for those of you that don't use a 21-3 chart, it's okay to take a trade that looks good to you that you lose. You just have to go back and talk about it. And was it the right trade? Was it the right area? Was it the right entry? Was it the right stop? Those are the things that are most important, because you do the same thing 5,000 times in a row, you're going to lose 1,000 of them somewhere in there randomly, maybe 1,500 of them, and you're going to win 3,500 of them. And you don't know which one it is, so it's the consistency over time with the looks, trigger line location, entry areas of management that's going to win out. All right. So short break, 2 minutes. I'll be right back. You guys post any questions, comments, or concerns if you have them. All right, guys, can you hear me okay? Just double checking my sound here. And again, we're getting into the spot now that we were talking about, right? And, you know, again, look, some of you guys will go long at the spot. Some of you guys will wait for a market flow signal because there was divergence up here. And again, we have to think about potential, right? So again, what's the potential of a long trade? 39, 68, 68.50. All right, Gary. Right on. I hear you, Gary. All right, guys, questions? I mean, we drew that box in there about, what, 10 minutes before it happened, so it's pretty obvious, isn't it, visually? Let's take a look. $58.75. I like it. It's not really me drawing the box. The indicators drew the box. I just visualized it a little better. But I mean, that's it, right? Now, some people take half off as you get back to a prior high, right? So, you know, if you were taking 4 points on half of your position, that's pretty much it right there. I think that was the pullback, Ed. I'm not sure if it's going to pull back again. I mean, it could. If it does, then it does to 60 or 60.50 or so, but all right, guys, I don't have anything else to say here at the moment other than there it is. Ed, any way to see sideways movement before it happens? I'm not sure what you're trying to accomplish. There's no way to know it's going to go sideways before it happens, or else you'd be Nostradamus. As you look at your trigger lines, you can start to get a bit of an indication. You know, let's just take, for example, right? Is it going to go sideways when you get back to a support or resistance? So let's just say, for example, you get to a prior divergence high. You know, when you look at your triggers, the suggestion is that, you know, we could start building some sideways action here. Does that make sense? Because of the trigger lines. But you don't know until you get to a prior high or a prior low, and then you gauge what your trigger lines are doing, then you can start to, you know, you can start to say, hey, wait, we might stop here. But there's no way of knowing you're going to stop until you actually stop. No, it doesn't have to. There are times where you get double tops, double bottoms in the market without a divergence line. Usually the second one will end up with a divergence. All right, so you guys are pretty much done with this trade, right? I mean, we're up, getting close to the edge, the end, if you're holding on for another point or so. Pretty easy run to the upside, and that's what you're looking for, guys. You're looking for every indicator on every chart to line up, and then, you know, you get your easy ones. And there's 68.50 as advertised. Again, is it going to stop there? I don't know. It might not. Who knows? But that's a whole bunch of red, and if you were long, that's a hell of a spot to take profit. You know, and here's the other thing. Look, if you used an 8-range large trigger, on your 5-1 chart, there it is right there. It's still the same thing. So, I mean, it's kind of redundant. I think overall for new users, and you know, again, look, those of you guys who have had software for 2 years, 3 years, 10 years, 12 years, 15, 18 years, you already know what triggers you like. The purpose of me making this little tweak is so that way a new user, and think about the guy who is in, or girl, right? Guy, girl, whatever, in week 1 or week 2, they start with a 5-1 chart and they start with a 13-2 chart. And they're trying to figure out why there's an 8 range trigger on their chart. And, you know, again, I think from a visual standpoint for new users, and that's really what I'm thinking about here. I'm not thinking about you old veterans that know what you're doing and have your own chart setups. If you go into the trader's room, you'll see, you know, 10 different people have 10 different chart setups the way they like it. You know, for example, let me see if I can, you know, I'll pull up a couple from other people. So here's a chart from somebody who's had our software for a long time. And they're running tick charts, which we used to run back in like 2003, 2004. This is almost exactly the exact same fib setups that we had back in, you know, 20 years ago. And they're still using it. They're still waiting for a mid band, and they're still waiting for a smaller tick chart to have some momentum. And then, so it's not wrong. It's just a different chart read. Another example of somebody else's chart who, you know, again, they're in there now and you'll see them, but they've opted for putting 3 or 4 trigger lines on their 5-1 chart. Is it right? Is it wrong? There's no such thing as right or wrong, guys. There's what works for you. It's not our job to tell you what you should be doing. It's our job to give you the basics on how to read the fibs and triggers, and then you can set it up as you see fit. Let's go. I'll pull up a different one. So this is another user who's had our software for a long time, and they're using a Bloodhound dynamic backtest Renko bar, which is kind of like our dynamic Renko bar, but without the fill. So there's no fill. It's just, it's the same turning points on the big bars, but it's a little different. And they're doing things differently, but they're still doing things well. Maybe a little early on that entry, but they held on and made some money. You know, so again, look, I don't want you guys to get stuck on the idea of you can only do one thing. This is another person who bought our software in 2005, who, you know, trades fibs and triggers only and keeps it very clean and very simple, and that's what works for them. So, you know, my point being is it's about reading the fibs and the triggers and deciding when and where you're going to get in. You know, we give you a really good head start with this 13-2-5-1 combo. But you can add to it, right? You can add, you know, just like we went back and we spent a lot of time this last week looking at a 21-3 chart. Here, let me clean up my mess here. And again, if you use a 21-3 chart, right, from, you know, 9:30 this morning when we hit mid bands and fibs, we said we're probably going up and we're going to eventually be at 68. Well, you know, that's a lot of points between support and resistance. And they made it. And, you know, again, if you also use a 21-3 chart, you're probably abstaining from any short trades where we took that short loser. And that's okay. There's no right or wrong. It's just what works best for you. Traditionally, when all the charts are going the same direction, 21-3, 8 range, 5-1, and 13-2, you get a whole hell of a lot easier trades. And now we're at, this is the spot where if you got that long trade, you should be taking a break, walking around. Probably not going to be a lot to do for the moment. All right, you guys want to go look at crude oil? Let's see how crude oil worked out today. So let's go through it together. Whew. All right, so we won't go through all of it. How about we go through from 9 o'clock, 9:30 on? Whose is that, John? Yes. I've changed out all it. All right. Let me back up. If you go to the resource page on the website, I've updated both of these installers for NinjaTrader 7 and 8 to have that 2023 5-1 chart template in it. So if you run Ninja 8, I did make all new workspaces too. Okay? So there is a template for it for Ninja 8. All right, so crude oil. Let's go through it together. And again, you guys tell me if I'm off base on the chart reading. Pivot stop out at the bottom. And again, I want you guys to ask the same question every single time you get a pivot stop out. Where are the small triggers in relationship to the large? And where are the triggers in relationship to the pivot stop out? Can everybody agree that that is a pretty damn good look for a termination condition? Now, you may or may not have gotten a long trade until after things broke to the upside, which is fine. Somewhere probably right there. We'll go look at the 5-1 chart together, okay? And then look, this was the one that somebody did long, which again, when you're looking at it from this perspective, that's just why I said probably not a bad trade. Might depend on what the 21-3 chart said right here. If you use a 21-3 chart, are you going to go long here? So again, I don't want to cause too much confusion, but anyway, all right, we won't cause confusion. All right, let's go forward. So let's just say you take a long and you take a loser. That's fine. Okay, then we hit support, which again, anytime you hit support, you're going to ask yourself questions. What's the question? Where are my triggers? How many triggers are going to break below this Fibonacci support? And if the answer is 0, it's probably going to hold, which it did. And then we get to resistance with weaker triggers, and eventually we roll over to the downside. And, without pointing it out, you can pretty much see where the trades are, right? So let's go look at our new 5-1 combo and see what it says. So let's look at the bottom first, where there was a pivot stop out on the larger chart. We also had a pivot stop out on the smaller chart. So we're going to be very conservative, and we're going to say to ourselves what, right? I mean, if you're an assertive trader, you're probably taking this as your momentum trade to the long side. If you're not an assertive trader, this is not going to be your first trade. It's going to end up being a trend trade. So let's talk visual. You guys give me your opinion of this visual right here. Is that pretty much the mother lode or what? And again, this is the one that, you have to say to yourself, based on the quality of the bottom, am I going to get out with a smaller divergence when the triggers are above everything else? Remember we talked about that? Just because there's a divergence doesn't necessarily mean it's going to kill the trend. So you have to read quality of the bottom, strength of your triggers. And again, this is the second one that somebody went long and lost, and that's okay. I'll take it. Then we hit Fibs again. And did we get another opportunity to go long? They're kind of mean like that, aren't they? You lost that one? Okay. And look, as long as you took the one in the yellow box before you lost this one, that's okay. As long as you got this long before you got this long, you know, you still should be to the plus side. Well, the apology usually comes from the same spot, Tim. So after they go down, you kind of had continuation to the long side there. If continuation isn't in your plan, then you're probably not doing it. You were probably waiting for something over here, realistically. I don't know what you guys were doing live, but you're probably waiting for some type of long trade right there that never came. I think the visual is striking, don't you guys? I mean, it's going up for sure. The only question is, are we going to get a pullback to get paid? And a one-to-one's a tough spot to buy, but maybe a fib the second time, and then, you know, ultimately we roll over. So, you know, again, once we get to the edge of fibs and we roll over, we start repeating the process going the other way. It's a 5-1 chart. I mean, I don't call it any. Nothing has changed. Look, it's a 5-1 chart. The only difference is they're running a 13-2 large trigger instead of an 8 range. If I put the 8 range on there, I bet you $7,000 to 1 that it's the same exact trades. I think the reason I'm doing this is because as a new user who's brand new to our software, it's easy to say, look at these large triggers going down. Do you see them? And it's same on both charts. And when we say, you know, should you be going short with this look? It's the same thing on both charts. So my contention, and look, you guys can say, fuck off, Novak, I'm not changing shit, right? Sorry for the language. You can say it. It's not, your charts are not my charts, guys. I'm only out to do one thing, to make it easier for new people to see the right trades. I don't care what charts you run. I don't care what time frames you run. I don't care what triggers you run. I only care about the new people who don't know how to make money yet, so they can see it easier. And they can understand that they ought to be short somewhere over here and holding on for dear life. That's your look. And look, I think it's, you know, look, if I put the other one back on, and I say the other one, watch. If I change the 13-2 triggers back to a range chart. So I'll change it to an 8 range chart. Everybody understand what I'm doing? So this is 13-2 large triggers. This is going to be 8 range large triggers. So I just switched the number. It's not that much different. It's a little bit different. But now you have the 8 range large triggers are still going up. Should I really be going short? And because new people are only doing 5-1 and, sorry about that, I didn't mean to do that. Because the new people are only doing 5-1, 13-2, This makes less sense to me and maybe to new people than just run what you see on the other chart. I don't know. I could be wrong. And look, I've been wrong before, and I'm not scared to change and change back if I'm wrong. So now I'm going to go to 13.2 dynamic Renko bar, and this trigger will be the same as this trigger, which is what you're trading anyway. So why not look at it? Call me crazy, but look, this is a democracy, guys, not a dictatorship. I want your opinion on what you guys think. Don't give it to me now. Go back and do a week's worth of replay. And go back and stare at this thing unmercifully and stare at where the trigger lines are and stare at the first time the large triggers roll at the 13s on the 5-1. You guys are the ultimate judge and jury. I mean, I guess even more so the new users, whether they buy or not, are going to be the ultimate judge and jury, right? So yes, I'm out to sell more software, and the easier I make it for new people to see it and make money, the more software we sell. So it's a win-win, triple win for everybody. Well, since you see where the 13.2 reversal bar marker is on this chart, Tim, you can just see it over here. For me, the advantage, and again, we've gone through this, but look, my trading plan says that if we have a good top or bottom, and I make at least a 13.2 reversal bar marker, I can do a momentum trade. This is my plan. Not your plan, my plan. So for my plan, and I'll show you the picture here, my plan says if I have a good top with divergence on the 5-1 chart, and I make at least a down bar, so that's why I like to see the visual on my 5-1 chart where that 13.2 down bar is. You don't have to have it. You could just look and see if you made a down bar. But I like it because it gives me kind of a line in the sand visual that we have to break in order to do my momentum short. So the advantage for me is that it's a visual clue on when we start making down bars on the other chart. So let's just say for grins and giggles, I was going to do a momentum trade. Okay. My rules say I have to have divergence from fibs on all the charts, which we did. And then I would have to have at least past the reversal bar marker, which was right here, which we did. And then my rules say I'd have to have strong small triggers past and down the line I was trying to sell, which we did. So this is not a great momentum trade, but you get the idea? I didn't mean I deleted the wrong damn thing, but I'll put it back on. Anyway, for me and my plan, that's parts and pieces. So, and look, you guys are more than welcome to go back to 5-1 Renko 03 02 21, which is what you have with the 8 range. And for those of you guys that download the update, you'll have the 5-1 Renko 2023, which I put in there for you. All right. Now, without even looking at the other chart, you can see the trend trade, can't you? You can see the trend, and the little bastards didn't come up back up there, but that's pretty much your trend trade, isn't it? It didn't get there, but it's freaking pretty obvious. As a new user, you can't possibly screw that up, can you? I mean, it didn't get a fill, but there's just no way. And that's really what I'm trying to get to, is to make it, you know, I dare say easy, visually easy. All right, other questions? Anybody else? I'm open for suggestions, questions. And look, I want you guys to look, you know, we used to use the 14-2 chart instead of a 13-2 chart for years and years and years and years. And the only reason why is because it was dumb luck. That's what we picked. And I switched it to a 13-2 chart, which was a major change. I mean, some of our clients didn't even change their 14-2 chart. And I haven't changed anything in years. And we don't have to necessarily. I mean, this is a one trigger change. But I've done a lot of work with the 21-3 small trigger. And I feel really confident that you guys are going to dig this look. There's no 5/1/2023 template? Let's see. Man, you're right. All right. Well, you know, after I did all the Ninja 8 workspaces first. And then I was like, you know what? I'm not going to change the templates, but I forgot to add it to the Ninja 7. I will fix it immediately. Dagnabbit. Now you can go save the template. Bear with me here. Here, I'm going to just give you the template in here. So you guys can just save this to your I'll give you the path. If you want to copy paste it to your chart templates, you can do it that way. Now I have to go fix the installer. Somebody asked me to change them all to 2023, but won't do that. Okay, so here's a question. And remember when I told you guys about going short on the wrong side of your large triggers? Do you want to go short after fibs hold on the wrong side of your triggers? You do not need to close NinjaTrader. If you download that zip file, just save it to your downloads. And then from your downloads, just open it up and then copy, right click copy, and then go to your documents, NinjaTrader 7, go to your templates, go to your chart, and then paste it. You don't have to do a full install to copy paste a template in there. All right. Questions. This would have been perfect. Don't you guys agree? I mean, look at that. If we could have got right there, I mean, that would have been the mother lode of all perfect things for us as far as trend trades go. So for the moment, we hit fibs, we have a little divergence, but there's not really anything to do here, is there? Probably going to come down here one more time and test this area. We'll see. All right, what's our S&P doing, guys? Let me go back to the workspace. Still going up. All right. The uptrend continues, huh? Now, there's not much to do yet. You know, look, we got to the edge of fibs. So that was the first fib at 68.50. Now we're at the edge of fibs. Again, that's the spot that's going to have to really break for us to really think about keep going. First of all, there's no such thing as we. We doesn't exist unless it's you and your significant other. If you say, it's a good bottom, but, let me double check. I'll check my rules. My rules say, if it's a good top or bottom and very strong triggers, enter at the 13.2 fibs or midbands and 1-to-1s. My short example. I don't think we're in this situation right now. We're not in a downtrend at resistance. And right now, we're not in an uptrend at support. We're at an uptrend at resistance. So it's the line in the sand that it's going to have to break in order to keep going up, or it's going to have to cause all the trigger lines to roll down before we start going short. So we're in the hurry up and wait spot right now. Now, could it keep going up? Sure, I have no clue what it's going to do. But I know for sure we're at a line that says we're going to have to break above this area in order to keep going. Right? I mean, that's line in the sand. 100%. Without question, you don't get above it, it's not going up anymore. Oh, that sounds kind of silly, doesn't it? If it doesn't go above it, it's not going up anymore. That's like saying the market's either going to go up or down from here. You're talking about crude? I have no clue what crude is doing. I'm not looking at it. But show me your rules on what you want to do. Show me your rules on where your checklist says, if this, then this, then this, then do a trade. If you have a checklist, I'll tell you if it's met or not. If you're just talking random generalities, you know, we'll look at crude. I mean, I'll look at it and see what it says. We've already said that crude was potentially at a bottom, but it's going to come back and probably retest it. So it's doing that. You're asking about the 21.3 chart. So let me rephrase your question. I want to make sure that I understand what you're asking. Should we go long? You're talking about crude. That was your question. Should we go long? All right. Everybody is we, so what do you guys say? Should you go long crude oil? Since it's a we question, I want we to answer. I say, hell no, not yet. What do you guys say? You say yes? Good luck. All right. I'm looking at this and I don't see any reason to go long. I don't know. I may be crazy, but I bet you they make it a little further down. Oh, there they go. Come on back. All right, so now let's take a look at it again. Let's make a small chart assessment now that we've retested the bottom. Somebody tell me where we're at now and how do you interpret where we're at? So would you guys say that this has the potential to be a pretty strong bottom? Pivot stop out at fibs, small triggers are above the large triggers. Has a good chance to bounce, don't you think? So what are the rules for going long if we have a good bottom? Anybody have any rules? I have rules. So if I have a good bottom, termination true on all the charts, and there's no triggers beyond the edge of fibs, I can do a momentum entry if the 13.2 reversal bars start going up and the small triggers are really strong. So let's look at my 5-1 chart. Just for grins and giggles, have we made 13.2 up bars yet? Yes or no? Nope. So no longs for me. Easy enough, right? So it's a cool spot, but there was no reason to go long with any rules. Now, I'm just going to throw this out there for those of you guys that use a 21-3 chart. When I said I was pretty sure it's going to go down just a little bit more, I mean, yeah, look, at least to the fib. And then when we get to the fib, if you use a 21-3 chart, I think 74.65 has a little better chance of being support because the triggers are getting inside. I saw no reason to go long whatsoever. Now, I saw a spot that it could stop, and it bounced, which was cool, but then it failed. All right. Do we get a trend trade short or not? What do you guys think? I put this to you guys before. Should you do a trend trade short on the wrong side of your trigger lines? Can you? Can you go short on the wrong side of your trigger lines? Should you go short on the wrong side of your trigger lines? I mean, there are times in strong markets where you can, absolutely. You don't know the answer? All right, cool. Well, the answer would come from more than one chart, right? You'd have to have a 21-3 that said yes. You'd have to have a 13-2 that says yes. If we're going to 65, you have to weigh out the risk to reward on that. And if you did it, you'd be under duress right now to be getting out, right? If they started making up bars here. Do you remember the continuation trick that I gave you guys earlier that made it a lot easier to go short after what happened? What's the continuation rule in the trading plan? Do you guys remember it? Smaller triggers roll, Mark says. So let's just see what happens. Let's assume we're still going to go down to 65. Okay? Let's just assume we're going to make it down to the Fibs. So I want you to watch, instead of going short above the triggers with the smalls going up, or at the Fibs with the smalls going up. This is the one I did in that replay video where I kind of cheated and got short right there, Mark, before the triggers rolled. So let's just see if they roll. This is where I go short. I think they're going down, but the indicators don't agree, and I end up getting my ass kicked. You guys too? It's like, I think they're going down, the little bastards, and I try to go short, and the triggers are still going up, and I lose, and I'm like, God dang it. And you go short here, and then you lose a little bit, and then you go short here, and you lose a little bit, and then eventually the small triggers roll over, but you've lost too many times, so you don't take the one short that actually gets all your money. Does that sound familiar to anybody? I know it does. And I'm not saying we're going down for sure here, so. Might make it up to 16 first. If I could go straight to the continuation rules in the trading plan, that would be really cool. Let me see. I could probably have a better chance of doing it on the... It's weird. I don't even know if I have that in here. Now you have to ask yourself the question, do you really want to go short against the small triggers going up? If you did, because of a 21-3 chart, this is that spot we were just talking about. I'm not feeling quite as comfortable with it, but just for grins and giggles, that's where the small triggers rolled over. Everybody agree? I surely wouldn't be risking very much. It's just, you know, it's just one of those areas that it doesn't look right when you look at your triggers, does it? Again, if it's going down is going to be determined by this chart. Oops, sorry. Let me scooch over. if you're using a 21-3 chart to determine whether or not an area is going to go down on your smaller chart, this is not the most favorable momentum to have it happen. If you were going to do continuation or edge trades, this would be a much more favorable look. Does that make sense? I'm not saying we're not going to go down from where we're at on the market, but if you're going to do edge trades, this trigger line look is so much easier than the other one. The other one may go down, but it may not finish. So it's down, but it's not as great. I'm going to look at our small chart still. All right. How many times, guys? I've done this 1,000 times, and I've lost like 90% of these over here. And that's where you come up with rules, right? Where you're like, little bastards, I know they're going down. I know they're going down. And if you just wait for the small triggers to roll below, at least you get a chance. And again, the chance is from 75 down to 74, 65. Or, you know, maybe halfway you take some and then get to break even. A really good example of a continuation. I don't like the lack of momentum on this chart. It just means that they don't finish sometimes. Does that make sense? I would be inclined to say 90% chance of finishing with this trigger line look and only a 50-50 chance of this trigger line look. Which would mean you'd have to manage your position if, you know, you run into stuff that doesn't break. You see yourself running into anything that didn't break? Maybe. Anyway. Have you ever heard Mark say in class that if there's a big gap back to your large triggers, you're going to close it? You've heard him say it before, but I think the visual is really cool over here where we actually did it, closed the gap to the triggers, and that's about it. I know that's not trading. There's not a lot to do right now. We're probably going to go to 16 and then test out and see what happens. There's nothing to do on crude at the moment. It's been done. How's our S&P? All right. So we said that they're going to put up a fight up here. They have done so far, huh? All the buyers said, you know what? I'm going to let somebody else do it now. Haven't they? Who wants to go short first? Anybody? What would it take to go short, guys? What are my rules? Let's just say we're not in a strong trend up anymore and it's over. What are my rules? Divergences from the edge of fibs on all charts. Check. What's my other rule? Do you remember? Just grins and giggles. At least a 13.2 down bar and the small triggers hauling ass beyond the entry area. So I would say this is divergence from the edge of fibs. What do you guys think? And then did we make 13.2 down bars? The answer is, say it out loud if you know it. Trying to draw where the window is. All right. Now, I'm going to take a snapshot of this before it happens so you guys can see it, the before look. Everybody with me? So here's your snapshot. What trade is this going to be? Not only my momentum style trade, but what else could it be? High volume line trade, right? You see it? That's why I drew the box in. I said somewhere between 69 and 70.50. All right, I'm going to put a picture in of this. So if I was going to sell, I would probably sell somewhere in the middle of that, knowing that I need to risk like all the way, you know, up here, and knowing that I'm the first fool to go against the trend, right? All right. I'll go a little lower and risk a little more. The first one to go short usually doesn't win in a strong uptrending market. But does that fit the rules, guys? Per my rules? Fib top, triggers below an area. Yay or nay? I know you're wondering, is it really going to go down or not? I don't know. My guess is that we're going to go a little bit higher, just because we almost always go up to the high volume line. Everybody give me a little feedback if you understand that. Again, that's kind of the first area on the 5-1 chart. The second area would be 70.50. I don't know what it's going to be. All right. Type in the word yes or no, you understand this. This is my trade, not your trade. And it'll probably go farther than 64, but yeah, I mean, the target's probably 61.25 realistically, but you know, these are the ones that they'll come down and you'll get 4 points out of them. So what's 4 points? 64.50. Don't even need to really risk any money, because if it doesn't keep going, it's not gonna. But let's just say 4 points on half, or the first one. Then a lot of times they'll come back up and they'll get that high volume line. Yeah, it's probably going to go down here. But since it's the first push, this is the, remember the pattern I told you guys where you get the first push, but then they'll come back up a lot higher and then they'll go the second time? So remember, on these momentum style trades, if you lose momentum, then you're out of the position. TTFM. All right. Now, this trade is only made possible by what? The fact that we had multiple fibs with divergences, with weak triggers, with a little momentum on our triggers. They're being stubborn, aren't they? Yeah. Well, I'm telling you where they're going to go. They're going to, if they go back up, they're going to go back up to here. And then you get a second chance at it. Right? All right, guys. So let's go through what I want you guys to do. If you're brand new to our software, I want you to go through our self-training channel info from top to bottom. I want you to read every word. I want you to watch every video. I want you to obviously join in our chat room. And again, look, this picture is literally everything we do. I mean, no matter how you word your trade, or no matter how you, whatever you call it, defining a good top and then finding an opportunity to go short after the first pullback is paramount. And again, if you only wait for the best trend trades, that's fine. But, you know, look, if it's really going to be a good top or bottom, there's extra money to be made closer to the top. So, you know, you may start out with only the mother lode trend trade, everything going your way and everything is perfect, which is fine. There's nothing wrong with that. You know, there's a lot of money to be made on trend trades. But the better you get at defining tops and bottoms, and more comfortable you get with tops and bottoms, the more assertive you're going to be. And if you can make that extra $200, $300, $400 before the trend trade, then it really, really helps out the bottom line. Probably one of the more, you know, and again, look, this has always been the case for us. Strong triggers up, buy pullbacks. Strong triggers down, sell pullbacks. I want you guys to really, 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 truly internalize what I'm going to tell you in this right here. If you're not risking any real money, you're going to have ovaries or balls of steel. You're going to be able to trade. You're not going to be scared. There's going to be nothing wrong. You're going to just hang on for dear life because you're so, you know, you're not going to lose anything. The more money, real money, percentage of your account you start risking, the lower your confidence is going to be in a trade. And if you risk too much money, real money, then what I have found is that almost nobody is able to follow the rules of their plan when they're over leveraged. And again, this is something that's universally true. The more you risk, the less apt you are to follow rules. So again, make sure you're doing the simulator first. Do the simulator until you can guarantee you can win. And then prove you can win by going to one of the, like Apex Trader Funding. Prove you can win. Go in there and get yourself, you know, get yourself a $100,000 account and spend, you know, look, it's going to cost you a couple $100. I promise you this $200 is going to be so much cheaper than you blowing out your first $10,000 account. If you win and you really do follow your rules, then you're going to make a bunch of money. Think about it. You're going to trade a $100,000 account with somebody else's money, and you're going to get 90% of the value of it. Are you going to put 90,000 of your own real dollars in an account and start trading live? No way. It's not going to happen. You're going to put 5 in, and you're going to say, that's what I can afford to lose, and then you're going to lose it. So do this first. Prove you can win, make a bunch of money, and if you blow out, it's okay. It only costs you a couple $100. Trust me, smart money. OPM. And then just, again, you're only doing trades where triggers and fibs and everything is favorable in your direction. And I want you guys to watch the Trading the Edges, Tops and Bottoms video again. So freaking important that you watch this video. The more, again, the more you see it, the easier it is. So look, pretty traditional, little, I'd say, where was that high volume line? 70, 50. May not make it quite that high, but anyway, this is a really traditional, where they go down on the first little momentum, and then they lose momentum, and then they're going to go up a little bit higher, and then they'll go down again. So basically trying to double dip here is what we're trying to do. All right, let me get this out of the way. You guys see what I'm saying? This is essentially trying to double dip on the trade that we did earlier. So we get the first little momentum, and then we're expecting it to go back up to the high volume line. So it's trend trade / high volume line. Maybe that's a couple ticks too high. Maybe I'm trying to get too cute with it. But all right, questions, comments, concerns. I want you guys to go back and study your charts and say, what fib held? What are the triggers doing? Should I have gone long or short? I may be trying to get too cute getting that high volume line, but would you guys agree visually to what you're seeing here? Divergence and lower divergence at the top. Trigger lines rolling. I don't know if it's going to get me or not, but that's where I'd like to see it get to. What do you guys think? You like it? Sometimes you get a double dip on a... All right, guys, questions. Elvis, I think I've solved NinjaTrader 8 crashing. You're not going to like it. I built out a brand new hard drive with only Windows 11, no OneDrive, no Microsoft anything, and I haven't crashed NinjaTrader 8 running synthetic everything for 3 straight days now. Well, here's the problem. Everybody loads everything on their computer, and there's so much stuff running that is not, if you get to the point where your whole life is about trading and Ninja 8 is the most important thing on the planet to you, load a brand new hard drive with Windows 11 and Ninja 8, and it won't crash. Now, I have a super freaking computer. I've got the new chip and all that kind of good stuff. So, all right, guys. So look, this is getting up to that high volume line area here. What you thought? Let me just go short. We'll see. What do you guys think? Trend trade after a top, triggers roll. Thought it might go to 70, 50, which it might still yet, but. Now, this is the same trend trade we did earlier that lost. You remember what it was? The triggers were above the fib. So we're kind of doing the same thing, but there's a difference in this one that we did earlier and the one we're doing now. This one, look at the top. We went sideways, but how many fibs are up here? 0. So, you know, again, without fibs, this one having the trigger lines above the fibs made it, I think, a little bit worse. The one that we're looking at now, we kind of have the same issue where we have, you know, triggers above the fibs. And again, it's one of those things that really causes a lot of trouble. The benefit is that we started the top from the edge of fibs. And usually, you know, when you have divergence, you usually make it down towards the mid band on the 13.2 chart. Now, can I show you guys something? We did it on Friday. I'm going to have to do it one more time today just because it's fun. You ready? In 2004, our trading plan said hit Fibonacci resistance and price. Trigger lines don't get past it. Sell a pullback. Oh, yeah. Without OneDrive, I haven't crashed once, Ed. Now, granted, I've got DDR5 memory at 5600, and I've got, you know, the super chip going, the 13K, so it's as fast as you can get. And the hard drive writes at 5,000 megabit speed, so, I mean, it's, you know, it's one of those things. But when trading becomes, you know, everything that you do, obviously that's what... Anyway, all right, so in 2004, you hit fibs, you got divergence, you sold a pullback to the triggers. Usually the market gets to the mid bands. So we're kind of operating under the same assumption here today. We get fibs with divergence, you sell a pullback to the small triggers, and eventually we're going to get down to the mid bands over here. I don't know if it's going to happen or not. Maybe it will, maybe it won't, but you guys will have to tune in after hours for this because I'm pretty much done with the chat room for the day. Anybody have any questions or anything you guys want to go through? If you have something, say something.